Hello traders, good evening and welcome to today's class. This is Forex Millionaire Expo, a YouTube channel where we bring you the undiluted raw fact about the forex market, right? In this YouTube channel, we bring you the undiluted facts. We don't edit much, we don't edit in short, we don't edit our video because we want to give you the pure facts about our videos and give you the real facts, stuff you need to know about the forex market without editing anything for you. We'll give you the pure fact. Okay, so you can support us by subscribing to this YouTube channel if you're not done that already. So if you're new to this YouTube channel, please like this video and subscribe to the YouTube channel. So I'm going to give you 3 seconds, right, to hit the pause button and subscribe to this YouTube channel. So let's go. 1, 2, 3. Okay, thank you very much for subscribing to this YouTube channel. Okay, so without wasting much time, I would like us to move over to the video of the day. So let's go. All right, so guys, today we'll be discussing about the forex analysis, right? We'll be discussing about the forex analysis, how forex traders analyze the market, all right? How different forex traders analyze the forex market to fit their perspective, to fit their trading style, to fit their trading system, all right? So first of all, I would like to talk about forex analysis. What is forex analysis, right? So right here on my screen, I gave a definition to forex analysis, and I said forex analysis is a practice of determining which currency within a pair is likely to be stronger over a given period of time. Okay, so let me break this down. On our previous classes, if you have not watched the video, I'll suggest you find your way into our playlist and watch the videos. Our previous video, we talked about forex, and I made you guys to understand that forex is an exchange between two pairs, right? It must consist two pair, right? When one is the base and the other one is the code currency, right? So analyzing the market right now is a practice of determining within those two pairs, because forex must consist of two pair, right? Before a forex trade must take place, it must require that uh two currencies must be in place, right? So you'll be buying one and simultaneously be selling the other one. Okay, so now for you to analyze fully well which one is going to be stronger over a period of time, like which one is going to have more value over a period of time, is what we call the forex analysis, right? So it means that you are analyzing the market. When I mean analyzing the market, you're putting facts together to tell you which currency will be stronger over a given period of time. So yeah, that is that for the forex analysis definition. So different traders have different perspective of different ways of analyzing the market, which is why we have three types of forex analysis, right? So first of all, we have the forex analysis, and then we have the technical analysis, we have the fundamental analysis, and we have the sentimental analysis. Now we're going to be talking about this guy here first. Let's talk about the technical people, right? Okay, so I made mention here that the technical analysis, this is the whole act put together to study recent price movement in order to predict future outcome. Right, so I want you guys to underline one thing. Okay, this is the whole act, act, the whole act, right? That traders put together. So technical analysis means that everything that you do on the price chart, every act that you put together, that you come together and put in place on the price chart, that helps you to analyze the present price action, right, in order to predict the future outcome, is called technical analysis. Most people employ several indicators to do the technicals for them. Most people draw supply and demand zones, most people draw resistance, most people draw support, most people draw whatever. People use Fibonacci, different kinds of instruments to determine and to check the current price movement, right, in order to determine what the future outcome will be. So that practice or that act is called the technical analysis. It means that you're technically analyzing the market with some certain instrument or some certain tools in order to predict what the future outcome of that same market is going to be like. So an example of that is this. If I come to my chart right now and I look at this chart, you see that for a period of time this chart has been going up. So this is a chart of euro USD. This is a euro USD chart, and we're on the 4 hours time frame, as you guys can see. So if you look now, you see that for a period of time these charts have been very, very bullish. When I mean bullish, I mean the chart has been going to the upside, right? So if you see that, you see that this means that uh, the euro is gaining strength over the US dollar, right? The euro is gaining strength over the US dollar. That is why the market has been on an uptrend for quite a period of time. So if I come to this chart now and I want to draw a particular trend line, let's say trend line or stuff like that, and I decide to draw a trend line based on some given facts, right? I might decide to zoom out of this chart and then I'll see all the whole chart clearly like this, and then I'll be able to draw a particular trend line based on the price movements in this market for the period of time that I'm looking at. I might decide to draw my trend line like this. I might decide to draw a trend line from here to this part of the market. So whichever way I decide to draw my trend line, so don't worry, I know most of you guys might not know what trend line is. As we progress into this into the subsequent videos, I'm going to elaborate more on how to use trend line and how to draw trend line on your chart. So this is just an example. It's not like this is how trend lines are supposed to be drawn. I'm just giving you an example of how technical traders do analyze their market before entry. So okay, so the most of them analyze using trend lines. Most of them analyze using some particular support and resistance area. So when I mean support and resistance area, you can see a support area is a place that is preventing the market from pushing downward, right? It's an area that is preventing the market from pushing further to the downside. It is supporting the market. That means it is holding the market from going to the downside. While the resistance area is an area in the market that is holding price from going pushing to the upside, right? It means resistance that is resisting the market from going to the upside. So another word for that, people used to call it floor and the ceiling, right? That's just an example of the floor and the ceiling, right? So that is that people most traders do use the support and the resistance kind of trading. So if we look at this chart right now, this is the 1 hour time frame of the same euro USD. If you look at this chart, I've zoomed in a little bit. If you look at this area here, you'll see that there was a period in time that the market was resisting to go up above this level. So if you come here, you can put a particular box here and call this your resistance area. That means price is failing to break above this level, right? So if I'm a technical trader, which I am, if I look at this market at this particular time, I might decide to employ my technicals into place to determine the price, that the way the price is moving here. Since this price has not been able to break above this resistance area, it simply means that the price is weak, and subsequently in the future this price might decide to fall down. And if I want to furthermore analyze this market, I might decide to use a trend line to know when the chart might easily change the trend from the from the uptrend to the downtrend, and this can be determined by using a trend line, drawing from one swing point or another on your chart, and then waiting for the price to break through your trend line to the downside, and then you can comfortably enter your trade and set your stop loss at a very safer position, right? So that is all about how technical traders do. They analyze the present market movements in order for them to predict what the future outcome will be like. So technical analysis is more like it's more like possibility than prediction, right? It's more like possibility than prediction, because if you're a technical trader, it will give you more your probability of getting a win trade will be significantly very very high. If you're very good at your technicals, your probability of getting a winning trade will be significantly very 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 high. So I see most of traders come into the market, and if you ask some of them what kind of a trader are you, they will tell you they are smart money concept kind of trader. Most people say they are snipers trader. Most people just look for one name or the other to call it, but in the actual sense, if you look very well, you see that those people fall in between. Those people fall in between these types of traders, right? It's either they are the technical trader, or they are the fundamental trader, or they are the sentimental trader. So they fall in between either of these type of traders, right? So but they don't understand fully well, because they think smart money concept is another kind of trading concept entirely apart from this one right here, which they are very very wrong about. Okay, so that is that for the technical traders. Okay, so let's move over to the fundamental traders. Who are the fundamental traders, right? So on my screen right here, I define the fundamental traders. This is a way of analyzing the forex market by looking at the economical, the social, and the political forces that may have effects on the currency price. All right, so the fundamental market is just all about looking at some events, some day-to-day events that might, affect the movement of currency, or the price of currency, or the value of currency. For example, if a particular country is having an election or stuff like that, which is a political event, it might affect the price of a currency. Remember, I told you guys that it's by checking, or the looking at some economical, some social, political forces that may affect the market, right? That may affect the currency price. So if the country which has the currency you're trading on are having some, let's say, a political a political election, right? It might intend to affect the currency either in a positive way or in a negative way. So with that, you can analyze and say, okay, for the time of this politics, for the time being of this election or stuff like that, this currency is having so kind of move. Maybe it's on a bullish trend, or it's on a bearish trend. So whichever way it is, then you can use that as a factor to determine or to analyze your market. So you can take positions based on the fact that because of this political event, this currency is going bullish, or this currency is going bearish. That is that for the politics, for the political side of it. Then for the economical side of it, some bank releases news, like some interest rates and some other effective news that could in turn affect the price of a particular currency, right? So for example, you can log on to your Forex factory. So these are major sites that you can use to get some economical news. So one of them is the Forex factory, www.forexfactory.com. If you don't know, I'm going to be leaving the link to this site on the description box. So it's a site that help you to analyze the market with fundamentally, like by reading news and checking the impact of news. All right, so here you can see that every day you have some couple of news that comes out, then the impacts on the news will have on the particular pair that will be having the news. For example, you see the yellow news, the yellow impact represent that the news is going to be medium, but the red sign represent that the news is going to be very very high. It's going to be a high it's going to affect the market in a very high way. It's going to make the market to be very very volatile when that news is being released. So you should be watching out for any news that have a red sign on it. All right, so whichever news you see that have red sign on it, you should be very very careful about them, because these ones, they tend to move the market in a very aggressive manner. So you have to be looking out for these news events, because they affect the market in a very very aggressive way. All right, so another site that you can be using to check your fundamental events, like your news events, is the myfxbook.com. All right, this one is one of my favorite. The reason I like myfxbook is because they give you the ability to track your account record. Right, you can be able to track your accounts by registering with myfxbook.com and then logging in your account back end into their site, and they will help you to track your site, your account, and give you some important valuable information about your account, so you know when you're in a drawdown, you know when you're in a profit, you know your losing streak, your winning streaks, how you lost, how many pips you're losing. So they give you all those details. They allow you to have access to all those details. That is why myfacebook.com is one of my favorite. In short, it's my favorite when it comes to fundamental events. Okay, so because they give us that access to um determine or to check our account, you understand. So, and also they have understandable way of interpreting the news event. As you can see here, it will show you which news is low, that have low impact, and the one that have medium impact, and they also show you the news that have high impact. All right, so they give you a better understanding of how this stuff, what they don't just leave you in the dark. All right, so that is why I say my Facebook is actually my my favorite when it comes to fundamental analysis. Okay, so with that being said, let's go over to the next type of analysis, the next way you can analyze the market, which is the sentimental analysis. Now, what is the sentimental analysis? That's what traders will ask. Okay, so sentimental analysis is all about uh, using gauging how other people feels, right? Okay, so I'm going to read from the definition I gave here. This is used to gauge how other traders feel about the market. All right. So, I don't know if you guys, if you've watched our previous video on Forex, the introduction to Forex, right? I made mention that for you to have a particular position in the market, it means that somebody somewhere is ready to take an opposite position from the one you're taking. That means if you're buying, there's somebody somewhere that is selling at that same price that you're buying simultaneously. That is the only way that your trade can be, can be executed correctly. So if nobody is available to buy at that your price, that means your trade will not be able to be executed, right? So sentimental analysis is just there to checkmate how traders feel about the market, right? It gives you a broader knowledge of how traders feel. I think this is one of the important um analysis we have in the forex market, but people don't really pay much attention to it because they feel with the technical and with the fundamental they are good to go. But sometimes you need to look into this. In short, it's not sometimes, most times you need to look into the sentimental, because every trader have a different view of how the market works, right? You might come into the market at the same time with me, the same pair, and then you'll be seeing a very, very different thing, and then I will be seeing a very, very different thing altogether. It doesn't mean that you're wrong, it doesn't mean that I'm wrong. It's just that we have different views of how the market looks. All right, though the market might be acting the same way, but we have different views as traders. All right, so that is why sentimental analysis is very, very important, because if you're able to determine how a particular trader is feeling about the market, then you can be able to determine how very large number of traders are going to be feeling about this market. That is how you win, because you don't win by you know you don't win by trading alone. You win by trading when the big banks, when the big players are making their move. That is when, if you're following their move, you'll be mostly in profit. All right, I don't tell people that they are always going to win, right? But if you're able to have a 70% win rate on your account with a good risk to reward ratio, I promise you that you're going to be a very, very successful trader. Even with a 50% win rate, as long as you have a very good risk to reward ratio, it's going to be a profitable journey for you. All right, so I always tell people that forex is a probability game that is mixed with money management and psychology, right? So if you're able to handle this stuff, um then know that your success in the forex market is definitely assured. All right. So most people come and ask me on my comment section and my DM, and they ask me most questions like, which of these analysis, which of them is the best analysis, right? Now, here's my answer to that question, all right? If you have all of them, why not use them? Why looking for the best? All right. If you have your technicals, you have your fundamentals, and you have your sentimental, why not use them? Why are you looking for the best? Why are you looking for the best analysis? That is why traders fail, because you're looking for the best. You're always looking for the best. Why not make use of what is available for you? Why not make use of the ones that are available for you? If you have access to getting your technical analysis, you have access to getting fundamental and sentimental analysis all at the same time. Why not use them so that you can increase your confluences and then increase your win rates? Because the more confluences you have, the more win rates you tend to have. All right. So if you have like 3 to 5 confluences and they all align to support your decision or to support your bias in the market, then there's a possibility, or there's a higher probability that your outcome, your trade is going to play out the way you intended, right? But if you're depending on just one kind of analysis, it's very it's possible that you're going to be successful, but it's going to take you a very difficult time. It's going to give you a tough time. Most time you'll be in the loss, most time you'll be in the win. But when you have access to all these types of analysis, then the sky is your limit. All right. So that is it for today, guys. If you like what you just watched, please support us by hitting the like button and also subscribing to this YouTube channel. It will help us to build and to create more videos like this at okay for you guys to for you guys to enjoy. We in this forest channel, we don't edit our videos. We give you the real fact, we give you the real insight of how the market works. We take you through several, right? So if you're not on our Telegram channel, we usually do our live stream on our Telegram channel every day, most times every day, most times every 2 days. So do well to hit the um join the Telegram channel on the description box. I'll be leaving the link below. So join the Telegram channel today if you have not done that. All right. So thank you for watching this video today.